Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and I've been talking a lot about platinum and how platinum had its alignment in terms of ratios against all the other metals and how it's cheap. And what I'm going to do on this one is I'm going to go over palladium, which was one of the other setups that we had in the mid-2000s, mid to end of 2000s. I'm going to show you what those ratios look like. I'm going to show you what the price looks like. I'll show you what the market balance looks like for palladium, just to show you an example of how ratios work and how well palladium had done over the years from the mid-2000s and late 2000s all the way till today. So I have behind me in the upper left-hand corner up here, this is the palladium price and market deficit. So this is supply-demand balance. That's what these blue bars indicate. So this is a positive surplus, and this is a negative deficit, which means that the balance went from a surplus of having too much palladium that was supplied to the market versus demand, which created inventories. And this down here is a deficit which would draw from inventories and eventually is going to put price on an upward trajectory. So when looking at the balance, you can see that we went basically neutral in this circle here, and the ratios tell us how money flows. It says that the money has flowed out of palladium and flowed into other assets like gold, silver, and maybe even platinum at that time. And I can show you kind of what those look like. And the ratios, they've got it behind me here. I'll get myself out of here. Here's the platinum to palladium ratio. Looking at it, I'll kind of zoom in here so you guys can see it a little bit better. This is platinum to palladium ratio. And really, the black two lines are kind of the average of what it bounces between. It bounces between 3, so 1 ounce of platinum can buy 3 ounces of palladium and up to 5 ounces of palladium. And it kind of bounced between these two areas the majority of the time, with a couple of anomalies. An anomaly here is about 1.5, a little bit under 1.5 in 1975. And then there was a huge anomaly in the 2000 era where palladium got extremely expensive in relationship to platinum. And then it jetted higher all the way to 4.5, and then this one above 5. Where we want to buy palladium, if you're buying palladium, you wanted to buy it in this region here in the mid-1980s, and you want to buy it in 2009. That's what the circle is. This is signaling that palladium is very cheap in relationship to platinum. Platinum, 1 ounce, could buy over 5 ounces of palladium. So 2009, it threw a signal saying that palladium was cheap and that we should be buying palladium. Right now, today, we are at this green star down here, and I put the line in here. It's never been as expensive against platinum, palladium that is, ever, signaling that platinum's never been this cheap in relationship to palladium. So platinum's the one to buy right now. But we went from a very undervalued area of 5, a little bit over 5, almost 5.5, all the way down to 0.39, I believe is where it's at today. Unbelievably expensive for palladium using this ratio. Now looking down here, this is the palladium to silver. In 2009, palladium was very cheap in relationship to silver. It could only buy maybe 10 ounces. So 1 ounce of palladium could only buy 10 ounces of silver back in 2009. Incredible opportunity to swap your silver for palladium, to get palladium. Then over time, it's made its way up, and we're at 103. I would have probably got out in this time frame at about 150. So palladium has never been more expensive, I don't think. Actually, back in the day, it's done 2 big moves, and it goes to about 160. And I think we're going to be coming back down, and I think you're going to see this come down with a shoulder, head, shoulder pattern. It'll probably come back to about 65, and then it'll continue to go down over time. That's my guess. But 2009, we had a cheap ratio of palladium to silver. We had the cheap ratio of platinum to palladium. And then the gold to palladium ratio, sorry, this thing isn't super high quality. I kind of blew it up. It threw a cheap signal saying that palladium was cheap in relationship to gold. That gold was expensive in relationship to palladium, and palladium was cheap. and we should have bought it in 2009. We've got all of palladium is cheap to all of the metals in 2009, and that's where we should be buying palladium, is 2009. That's what it's signaling. The star here is where it's at today. It's never been this expensive. So palladium is now expensive to all the other metals. Moving on up, in 2009, looking at this green price chart of palladium price, right here in 2009, I would have been buying kind of where this circle is, all in this area is where I would have cost averaged in 08, 09, and 2010. That's where I would have been buying. And that price was I think it bottomed at like $200 ish, and then, $250 to $300, $400 all through here. And that's when the deficit, right before the deficits, and then price exploded higher above $2,500. Would have been a very nice ride for a low risk, high reward potential here. Platinum is in the same exact scenario right now. Platinum's never been this cheap in relationship to the other metals, in terms of silver, gold, palladium, and rhodium. It's cheap against everything. We have a similar market balance, like right here coming up. We're right at this inflection point. It's actually a little bit negative, and we're going to be going into a deficit like this coming up. And the next 10 years, you're going to see this massive deficit in platinum, and I think you're going to see prices rocket higher. So I wanted to go over palladium to show you kind of what things look like real time. You could see what the ratios were in 2009. It was cheap against all of the other metals, and it threw a buy point in 2009. Now, the other metal that went really cheap in 2016 was rhodium. Rhodium was really cheap in 2016. It was an anomaly as well, and that had the same characteristics as palladium has right here. It had a surplus, then went into a balanced market, and then went into a deficit. Platinum is a spitting image of palladium right here in terms of market balance and in terms of the ratios all throwing cheap, just like palladium was in 2009. So I wanted to go over this as a case study to show you guys, hey, look, this is what happened with palladium. We got the buy signals in the ratios, and then we got the market balance and where we should have been purchasing it for this particular case study. Platinum is in the same exact spot as palladium was in 2009. And I would almost argue that platinum's never been this cheap ratio-wise against all of the metals. So it's going to be very interesting to see how these things interact together. You can be cheap where the metals stay expensive, but platinum does a big catch-up, and that's what we want it to do. Or palladium and rhodium will come down some while platinum goes up, and they'll meet somewhere in the middle. I'm sure there's a little bit of that going to go on. If the deficits continue with palladium, I think palladium's going to hold strong. And if rhodium can hold strong, I think platinum's going to do a major catch-up. So what that means is if the ratios start to contract, and let's say, if you look at this platinum to palladium ratio, let's say palladium stays at around, I don't know, $2,000. And then platinum, if it goes back to more of a cheap, where it becomes 5 times as expensive, that means platinum could go to $10,000. I'm not saying that's where it's going to go, but using the ratio, if palladium were to stick at around 2,000 and platinum were to go 5x, because that's what a 1-to-5 ratio is, and palladium were to go cheap in relationship to platinum, that means platinum would have to go to $10,000 an ounce. Obviously, we could meet somewhere in the middle. Maybe palladium goes to 1,000 and platinum goes to 3, 4, 5 grand. Very possible there. Those numbers sound about right. So that's probably what I would expect, is about a $5,000 platinum price, a gold price of around 5,000, maybe something like that. And then maybe palladium goes down to like 1,000 or 1,500 or somewhere around there. That sounds about right. If you guys like this content, give me a thumbs up. Appreciate you guys listening. This is Finding Value.